Hi there, welcome to GrainTV. I'm Kevin McNew. It's Thursday, January 21st. We had a mixed day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was off 1 3/4, beans up 4.5, and wheat off 3.5. Although beans and wheat closed higher, they were well off the highs of the day, losing about 7 cents from those highs. We started out very strong and spent most of the first half of the morning in positive, strongly positive territory. Beans up as much as 12 cents at one point, but the last half of the trading session was just pretty much down and flat towards the close. Some of the news out this morning: we had Egypt buying wheat, and the usual suspects of low offers were out there from Romania, French wheat, and Russian wheat in the U.S. again being shut out of that deal. Around 250,000 metric tons all going to those three countries. In ethanol news, we had ethanol production off 20,000 barrels per day to 983,000 barrels, and stocks of ethanol up nearly 500,000 barrels to 21.9 million barrels. So nothing really exciting there for the corn market. The other news that came out today was just more confirmation of sort of the depressed state of grains. The International Grain Council pointing to the largest carryout of world grain inventories in 29 years. So that is not something we're terribly excited about if you're looking for a bull rally. The only sort of silver lining in that IGC forecast was corn production being slightly lower on weather problems in South Africa and India, but overall it continues to point to the problems of burdensome carryouts and burdensome supplies. One intriguing piece of news came from Farm Futures magazine, which did a survey of readers, and you can't place a lot of stock in this, but it is intriguing to at least look at this time of year. And the survey asked farmers what they were going to plant in 2016, and these numbers came back quite a bit different than what Informa touted out last week. And if we look at Farm Futures forecast, they're looking for actually quite a bit lower production in soybeans, 82.2 million acres versus 82.7 planted to soybeans last year. That compares to Informa, which actually looked for a 3 million acre increase in soybeans. So on corn, both of them are sort of looking for marginal changes in corn acres. Farm Futures looking for a little bit more of a shift to higher corn acres versus Informa, but a big swing in soybean acres. So that's going to be a real wild card perhaps as we enter the talk of the planting season as we get closer to spring. Let's take a look now at some of the charts from today's trading activity. And let's start first with corn. We talked yesterday about 370. That was a pivotal point to get through. We were able to get through it today, but we've managed to close below it. So 370 sort of came and went. We closed the day around 367. We're still above that 364 mark that set the stage from the USDA report last week. So, you know, it's been very choppy trading. We were basically, like I said earlier, higher in the first part of the day, weaker in the last half of the day, and corn fared pretty weakly on the close. In beans, we again had a really strong day. These are 4-hour bars on the charts here from our Grain Hedge trading platform. You can see we had a really strong 4-hour period in the first part of the day, but the last half of the day basically led to sort of a lower trade off of those highs. Now, what's interesting is you look at this formation, you can almost start to see what may be taking shape as a head and shoulders formation. You've got the head right around 888 is the high. The neckline, which forms support in this market, around 871. So if we do actually start to get down to 871 and can penetrate below that, that might be signs for lower prices to come. And technicians would suggest that that head and shoulders formation would have a target price of about 854, which would put us down at the lows that we saw about 2 weeks ago. So that's something to keep in mind. You know, are we going to return to these highs of 888, or are we going to maybe trace out the rest of this head and shoulders formation and move lower? That's all we got for today. Tomorrow will be the export sales report, which was delayed thanks to the Martin Luther King holiday. So look for those numbers. Trade looking for not much big changes in terms of export sales, so we'll see what USDA throws first thing in the morning. If you want to hear those numbers early on, then by all means follow us on Twitter at GrainTV, or if you're interested in learning more about our marketing services and trading services, visit us online at grainhedge.com. That's all we got for today, and trade safely.